Now I'm going to switch over to gold. Now gold has given us some warnings in here, and even though we're getting a good update on Friday, this is giving us some reason for caution when we look at that. So I'm going to switch over to /GC, which is our gold analysis. When looking at this chart, there's going to be some first-time viewers in here that are going to say, wow, what is that? Look at that mess. How can anybody possibly read that? Well, I'm just going to say it for you because some of you are thinking it, but forget about it. There's so much information in here of value. Once you learn to read it, it's just amazing. We talked about this area right over here, this yellow zone, and that we were likely to get more than a $300 upside move after this had ended. It was a $435 upward impulse. It was just spot on. Then when we got past this yellow zone right over here, we said, well, the next upward impulse is likely coming. However, this is a problem. Now, it got close to a breakdown in this panic. It stopped and left that tail. It's close enough for us to say, well, not yet, but it is worrisome. We had anticipated that gold would be moving up and get past these resistance zones and even test this high level up over here near 2100. That line right over there is a fib extension up at around 2107, which was where we were projecting. Resistance is right in here. Now, our daily charts show you all of these, and if you go to Future Speak on Wednesdays, you'll be able to see the specifics on these resistances in here. Now, there's a daily resistance right over here that comes off the daily chart, which it's trying to get back up to right now. That's around 1890 to around 1920, which is where we think it's coming up to in here at very, very least. If it could save itself, it will move up in here. It needs to get over 1967, up right over here, to repair itself, to get away from the trouble it's in right now. And the problem is that the dollar looks to us like it's going to bottom very soon in the next few weeks. And if that's the case, it's going to put pressure on the gold market. If you get underneath this level over here of about 1848, again, it's going to change all of these upward projections. You had this nesting period right in here where all of these cycles were coming down. The GDX cycle, the dominant gold cycle, the silver cycle, which bottomed early in here, has been rising up. We like silver better. It's not as broken in here as gold might be, and moving further away from a problem area. So this is, to us, a problem that we look at that. We had momentum turn down in here, as you could see, and then flatten out, but it's not able to move to the upside in here, and that is a problem also. So we're putting a warning sign out, a caution sign. The yellow flag is up that gold might be in trouble. And if we're into this rotationary period where people are taking, putting more risk into value, things that are value, they're not going to be interested in gold under those conditions. So this forward impulse, upward impulse that we expect in here, it might have aborted. It's really important for us to see any kind of a change in here. And if the dollar does turn stronger, as we expect, in the next couple of weeks, this could be in some trouble. So the caution sign is out for the gold market when we look at that. It still is hanging in there as with a positive bias, but we're extremely worried about that. Can it save itself under a condition of a weaker dollar in these next couple weeks and then pull away to the upside, and then when there's room for it, when the dollar strengthens? Or is it going to break below 1848 and signal a big top? If it does that, and then these projections will be pointing to the downside, not to the upside if that happens. Very key time for the gold market. So that is a look at the 1 to 3 view of the gold market, and very, very key levels out there.